Welcome to Brave New Edge. Today's guest is Anupam Satyasheel.
Hi Anupam. Could you give me a high-level introduction of yourself and your role at Occam's advisory?
Thank you so much for having me here. I'm the founder and currently the CEO of Occam's Advisory. We started in 2012. Through the evolution over 13 years, we have worked with middle market companies and families to advise them on various aspects of business, from starting a business to growing it, to raising capital, exiting the businesses, and then deploying the capital effectively. That's the short history of the company. We are continuously obsessed with latest technological trends, and that's why in the last 4 years we have spent a reasonable amount of resources, increasingly more, on our AI capabilities and also advising our clients on profuse deployment of AI to become more efficient with their systems and processes.
So what AI-related trends are you seeing in the industry that you're in now?
So one can say that we are in, just use the baseball language, the third inning of AI evolution, maybe second, depending on who you ask. But the basic use has been in terms of research. People are delegating research to Perplexity, Gemini, ChatGPT, depends on what you like, Grok. They are using it for automation, for emails, for client management, for lead generation. And then it's increasingly being used to demand more productivity from employees. So research which could be done earlier in a week, because most of knowledge is available, your work is down to validation now versus actually reading through papers and summarizing while typing it out. So because of that, those are the key trends that we are seeing, at least from where we sit.
And can you tell me your vision of future of the financial advisor? So will AI replace the traditional financial advisor consultant, or will it create a hyper-efficient hybrid? And what are the new skills that an advisor should possess in this year to effectively leverage AI, so rather than being replaced by it?
I am of the belief that AI is actually going to pretty much replace most things that an advisor can do. So before we jump into why I believe that, let's look at what advisors do. They interface with their investors. They have a mandate to get them decent returns on their investment. And they typically do it by investing in equities, bonds, in some cases alternate assets, maybe in real estate driven products. Where they decide to deploy the money is a function of what they understand best in asset class. Here I'll make the first big statement, which is not my statement, but it's a fact of life that knowledge has become generic now. You can ask the AI agents to do all kinds of research for you. They can build the bar charts, the graphs, they can give you information which it took weeks for earlier for people to put together. If knowledge is generic, then the intelligence is in making decisions. So the advisor today has to make a decision of which asset class they want to invest in what ratio. That question also can be answered by ChatGPT. If you give them that this is my investment horizon, this is my expected return, this is my risk tolerance. So increasingly you can see that most of the things an advisor was doing can be done by a system. So the problem today is not that can AI replace the advisor. The bigger question is, will an investor trust AI to replace the advisor? I'll give you a completely different example. One of my business partners, he just went through a hip surgery. And when they had to drill a socket into his the anatomy and create space for the artificial hip bone, he was given a choice between a person doing it and a robot doing it. And given that the best surgeons also can have an off day, but a robot can't have an off day, he chose the robot, and he was pleasantly surprised as to how efficient and well done it was. Another example, I drive a Tesla. We recently turned on FSD, full self-driving. It drives better than me for sure. Like my children sit at the back and they're like, yeah, this is driving better than you, daddy. You have all the careless turns, and human nature, right? We do those things. Through those two examples, what I'm trying to bring to you is that just like it took David, my partner, a leap of faith to trust the robot to do his surgical part versus a human being, it took me some getting used to for Tesla actually driving us around. Once the investors feel the confidence that the robot and the AI can do the part that the financial advisor was doing earlier, then the 6, 7, 8% or whatever they give to them can be saved. And that's an incentive for people to choose AI over a real person. So I think the writing is on the wall. It's not a question of if, it's a question of when.
So again, on the question, so what new skills most an advisor possess this year to effectively leverage this AI? So is this something that is taught at universities right now? So if you go to the traditional universities right now, so are you getting those sort of trainings?
I'm laughing because I'm a huge believer that our education system is a decent decade behind reality. You have young boys, I have young boys, they go to school, and when I see them come home and write on paper the tables and add numbers on paper and have a carryover when they're doing larger numbers, I'm like, is that real life? In real life, what they do is they pick up their phone and say, hey Siri, what's 75 plus 217? So if that skill is never going to be used in real life, then why are they being taught that? And just before I started this conversation, I was with my dentist. He has 3 daughters aged between 3 years and 9 years. They just pulled them from public school, so they're homeschooling all 3 of them. I'm giving these examples to make the point that I don't think that the education system is keeping pace with the evolution of AI. They are going at, let's say, 1,000 miles an hour. Education system is barely at 100 miles an hour, if at all. Hyper customized education is required. When we talk to people as to what they're being taught at universities, like we have interns and fresh associates in the company, they're not being taught AI in colleges. They are learning to use it in real life on their own. There are some specialized courses for people who are interested in that. But I think unless universities come together and decide to change their curriculum dramatically, they run the risk of becoming obsolete. I mean, obsolete for education. They might remain relevant for networking and, social aspect and big boys club, whatever you call it, but not for education and training.
And what are those new skills that the advisor should possess? So what is that universities should teach the financial advisors in your opinion?
In my view, they have to be teach skills which are hard to be cloned by a machine. So if you say I'm good at research, you're wasting your time. There's no way we can do research as quickly as ChatGPT can do. If they're saying we are good at analyzing trends, again, the trends can be analyzed. You can have all kinds of complex tables put out there by machines. When it's about trying to read what's coming down the pipeline, betting on the future, that is something called the skill set of understanding a trend, using a trend, and leveraging a trend. Those 3 things are very important for any investor. So understanding the trend, analyzing the trend, that AI can do very well. When it's about interpreting and thinking what is coming through, that I still believe human beings can do very well, probably better than machines can do. Because all AI can do is analyze the past. It can look at the trends which are popular right now, but based on that, what do we do? For instance, there were some very smart people who said in 2015 that Bitcoin is a good investment. Let's buy this. Now, that was not based on knowledge. That was based on hunch and analysis to some extent, but mostly on what does money do and why Bitcoin is a very good example of a monetary system. And those people are very happy with returns right now. But if we go and ask financial investors, financial advisors right now, they are not betting on cryptocurrencies even when the noise has become clear. People can see that it's no more noise, it's real. We need to actually pay attention to the asset class. Countries are, states are, large ETFs and funds are, even BlackRock is. But so to come back to a direct answer to your question, they need to be able to bet on a future trend using intuition, which I believe still is uniquely human, versus just reading charts and crunching facts and saying, okay, based on the past future is going to be like this. I know I'm giving a long answer to you, but one of the substantiations to what I'm saying to you right now is, if you look at the history of returns, we almost never had a situation when on the same day stock market and gold and cryptocurrency, I mean, they didn't exist earlier, but if you just talk about stock market and gold, they typically have diverged. But pretty much for the entire month of September, gold and stock market kept hitting all-time high on the same day. It happened probably last time in 1972. Now one has to understand that how it's making sense. It's making sense because governments are buying gold because they don't believe in dollar anymore all over the world, including the US government to some extent. And the stock market is going up and up because of the dollars available. The fiat currency is available in abundance. Now, if it never happened before, I don't think AI can understand that trend as well and say, oh, this is departure from the trend. You can bet on gold and stock and make money both ways. But a traditional financial advisor will say, nah, it's just not going to happen. Either gold is going to win, or stock is going to win, or is Bitcoin going to win? But it seems all three are going on hitting all-time high continuously. And I think part of the answer is in AI, because AI is making companies more productive without relying on human capital. And that's why you're seeing increased levels of unemployment. And unfortunately, that will continue like that, to my understanding. And we are seeing still more profitable companies, still higher stock market returns, still higher gold price because of governments buying it, and still higher Bitcoin or other cryptos because of the rush to acquire alternate assets. So a long answer to your short question, but I think the only thing they can leverage today is intuition, while deploying AI profusely to save the research time.
And how these trends have specifically impacted your business operations or strategy?
So we are a bit of an outlier in terms of adopting early technology. I'll give you a different example. We started buying Bitcoin on the company balance sheet in 2020. Bitcoin treasury companies is a big thing in 24, and 25 has become a mainstream thing. We saw the value and we said, okay, let's punt on that. So it's almost funny because we said 5% of all our cash flow will save in Bitcoin. And a lot of companies are saying 5% today. And this was in 2020, more than 5 years ago. Likewise, when the government shut down in the US for COVID and many other countries, our view was that it is going to accelerate the technological evolution, because when people are left on their own and they can't go out and socialize and do good stuff they were doing earlier, many people will go inward, which means there's more time for creative work, which means technological evolution will fast track. And exactly what happened. McKinsey says that in the 2 years of COVID, technological evolution was of 7 years. And unsurprisingly, we saw in 2023, ChatGPT came out. That was the first big publicly available example of AI. And we have seen what they have done in 2 years' time. Every month, pretty much, they're bringing out something which is not done before. Coming back to our business, we started investing in AI resources in 2021. And fast forward today, our efficiency has been dramatically higher. So if you look at our employee count, it's pretty much flat for last 4 years. But in terms of what we are able to achieve, it's 3 to 4 times higher. And that's coming from our deploying artificial intelligence. We have something called AIQ for all the employees. The existing employees have to improve and adapt. People who are being interviewed and hired, they are required to understand AI and be AI savvy, otherwise we're not hiring them. I was partially correct in saying that employment headcount has remained the same. I was talking about US and Canada. We have hired many more people in India, and that's where we are seeing that the AI adoption is even higher. About 90% people in India in workforce are using AI one way or the other. And when they're coming in, it's helping us to have people who are AI savvy. So again, to quantify it, we are 3 to 4x more productive because we have been relying on AI from the beginning. One example which makes it very clear is like when a client writes to us asking a question about a tax return or a financial decision or status of their statement, we simply have an AI system which reads the email, pulls the data from systems, creates the response. They save it in the outbox for somebody to actually read through it, and then the person simply says, okay, good to go. So the response time has shrunk by 75 to 80%.
That's good. So that was actually my next question. So beyond basic chatbots, what are the tools that are, or applications of Gen AI that you use and you foresee that will be actually used in the financial services in the next time?
So Gen AI applications are already mainstream. Everybody is using them. The agentic AI is our next area of focus. We are building a platform, for example, it's called Occam.ai. It's already out there, but it's not publicly available, but anyone can go and test it. So starting a business, like incorporating a company, all the way to having a bank account, access to hiring resources, or running a lead generation campaign, think through life cycle of a company, getting a credit card, whatever a business has to do. We will go on building those capabilities where you can get everything done without engaging with a human being. And as technology improves, we anticipate having agents who will going to be AI agents who can answer questions almost as well as a human being can do without the, it's 24/7, right? It's not that they have to be fed and they need to have 8 hours of sleep and recreational evenings. So that's will go on happening. So I think because of our being futuristic and looking forward to future trends, we are reasonably ahead in the game. Again, we're not top of the tier. There are many companies who are way ahead, but we all have heard about people trying to build $1 billion company without having a single employee. So that's where the world is trying to go, right?
Yeah, so the AI is, I would say that those tools are as good as data which they consume or the data that they are trained on are based. So in this SME and the mid-market financial space, so what do you think is the most overlooked or underutilized internal data sets that an AI model can currently turn into a competitive advantage? So are you using some of those, or what kind of data are you using to train your models to use inside your decisions? So are there some standard data that you're buying, or you have some call transcripts, internal email chains, or transactional metadata? So what are you actually using for in this space?
So Occam's group has about 24 entities across Canada, India, Middle East, USA. So we have used our financial data and operational data for last 3.5, 4 years in training our models. So it provides a reasonable amount of regulatory, cultural, currency diversity for us to be able to test it and improve the models. That being said, 2025 companies' data is not enough. We haven't gone out to buy data to improve the capabilities. I'm sure people who rely, or businesses who rely more on data, probably are doing that. We haven't done that yet. But what we have is enough for us to be able to create reasonably advanced tools. Like we're building something called an AI CFO. Most small businesses don't have access to a CFO, and they end up relying on their accountants who, with due respect to them, are lousy CFOs. So we are trying to translate numbers into words. So if you use our yet to be released AI CFO product, it simply takes numbers and says, okay, compared to the previous quarter or the corresponding quarter last year, these are the changes. But more importantly, it tells you that your lead per the cost of acquisition per cost per acquisition is higher than the market. So you need to reduce that. You need to find a better way to secure source clients. Or it tells you that your HR expenses or your technology expenses are lower than competing companies. So you need to invest more in that. So that kind of English 7, 8, 10 guidance is coming from just using that, which probably somebody can have for $3.99 a month. You can't really provide a human being of that kind. So my point is that these tools will increasingly become available to financial advisors if they're paying attention to it. And that can make them more capable compared to the next guy. Now, in terms of evolution, a financial advisor doesn't have to compete with AI. They have to compete with other people. So, barring a scenario where 90% people are unemployed, which will probably happen someday, that's my fear. But till the time we have next 10, 15, 20, 30 years, we are better off actually training human beings to deploy as much AI that they can so that they're in a better place compared to the people who are not using AI as extensively.
Yeah, that's definitely where we are heading to. So okay, so another question is what I see is that okay, so in the small, in SME and mid market, you are actually handling decision science and risk assurance. So this is something that is a key service in this case, and the risk is everything in this sort of decisions. But when scaling down those AI-driven risk models from large banks, because I guess that they are providing most of the data, and the models are actually trained on those data sets. And when you are scaling those risk models, which are used by the AI, from large banks to SME, so what do you think that might be where this simplification can compromise actually results? So if we are simplifying some of those models so that they become too simple to be effective. So is there something that you can help us to understand? So when we are simplifying the model to the extent that it is too simple to be effective, from scaling from big data companies to actually SMEs?
I would say a really important question which a lot of people are not asking. An average person today enjoys the word hallucination. So when they talk about AI, they talk about hallucination, they talk about errors they make. Like we had this fun with my older son using ChatGPT he got 40 words to reverse alphabetize. So he had to go from Z to A, like just a dictionary does it, except in the reverse order. And he put this in ChatGPT, and he tried 7 different times, and they kept getting it wrong. Now, something which can do all the crazy good stuff, it couldn't just reverse alphabetize.
Yes.
And it was like, yeah, he's hallucinating. So everybody likes that term. I think it's being overused right now because every error is being attributed to hallucination. That's not the case. The case is that AI models which are being built, as you said, to scale, to look at maybe a billion pieces of data, and now you're asking it to simplify it down for somebody who's going to look at 10,000 pieces of data. They just are not in a position to make sense of the thing the same way. So the real risk that the inference is based on under analysis, if you might say that, because in the context of large financial institutions, they have reams and reams of data. They take it to middle market advisors or middle market companies. Now they're looking at very few pieces of data, and the same methodology will not work. And these are the gaps which will remain in the domain of human beings. If we don't think through, no, this doesn't apply, you can make a decision which can really hurt your business if you're not paying attention to what is working for a large company might not work for you. So our endeavor always is that till that competency comes in AI, that it doesn't require human supervision, and it might never come. It might never actually be fully self-sufficient, regardless of what people say about general AI, that it becomes so powerful that it takes over the world. It might or might not happen, but till that happens, we have to handhold them. And to my view, it's important that companies like us or whosoever is in the space go on building AI which is targeted at smaller, simpler operations. So our models are designed for those companies. They're not designed for a JP Morgan Chase or a Bank of America. They just will not work for them.
Yeah, that's exactly what we need to take care and to train the models on the data that we provide for those specific SMEs and target customers. Thank you. So I guess that helped me a lot to understand the status. And just as a final question, so what would you say that your business does extraordinarily well compared to others in your space?
Say it with some degree of caution and a less degree of pride, that we try to look future backwards. So what is going to be the world going to be like in 2030? Use all the research available to us to say, okay, let's prepare for that future. We tell our clients, let's prepare for that future. Be underprepared for what's coming down the pipeline. I gave you the Bitcoin example. I gave you the AI example. Unfortunately, small businesses are uniquely adamant on what worked in the past is going to work in the future model, which is just not true. It's increasingly clear that AI is not a fad. It's not going to go away. Cryptocurrency is not a fad. It's clear that countries going away from globalization might be a fad, maybe, we don't know, but the first two are not. Again, the whole point is that trends have to be understood. People from Asia were happy migrating to Canada or America or England in search of a better life. It might not be a good idea anymore. That's the futuristic situation. Or before the podcast, you and I talked about how the global population is running the risk of not going to even 10 billion. Now, if you're saying that the world population will go on increasing, there are more people to sell to. If the assumption is not being questioned based on what's coming down the trend line, then they'll be in for a rude shock. So we try to continuously think of what's going to happen in the future and then prepare for that in the present. And that's why the focus on AI or Bitcoin or in general adopting a huge amount of technology. We tell our clients to do the same. Now, our voice is not loud enough to be heard by everybody, but we want to make it louder and make a name for ourselves for calling the trends. But overall, that's what we think we do pretty well. Try to read what the future is going to be like and prepare for it.
Great. Yeah, that's a great advice for sure. So for everybody in this market, and I hope that you are, as you said, giving this advice to your customers. So it is definitely something to follow on. And I think that we can close this discussion with this. Any final thought to say right now?
I would say that as a final thought, for whether it's an investment advisor or investment decision maker or a business, I personally believe that the ones who are not paying attention to the phenomenon called Bitcoin are missing out on something. And it's not because we have invested and seen an upside. It's uniquely people's own money. If we think of it from the first principles, a dollar or a euro or a Swiss franc is government's money. They decide how much to print, how to deploy, how to tax people directly through taxation or indirectly through additional printing, which is inflation. But because of fixed supply and decentralized management, Bitcoin is uniquely people's money. And I recommend to everybody to understand what it can do for them. And if they feel comfortable, then whether they spend $1,000 or $1 million to acquire some for themselves, is a unique feeling. It's like when there are billions of people in the world, but everybody has their own child or children or parents. They want to have their own family. So likewise, when people can think of it's my asset and I can actually have a slice of it, I can have a slice of a currency which is uniquely people's money, it creates way more than just appreciation. Appreciation, I think, is the bonus. The feeling of autonomy and sovereignty is what is crucial for mankind to have. We were born sovereign. We're not supposed to be tied down by all the small things we get tied down by. And Bitcoin allows us to think on those lines. It might sound a bit philosophical, but I think it also is highly liberating to understand that you actually can have your own money.
Yeah, this is definitely a democratization that we are seeing, not just in the financial trend. We did see this like in the, let's say, phones, like it's not with the iPhone, everybody has like a, pocket computer that can use, and you can use it in any part of the world, so you do have access, and through internet and through all of those technologies. So this is democratizing the knowledge of course, previously you had to go to some specific university to get a hold of some specific know-how. Right now everything is there, so this is what we're seeing. And right now, as you said, the bitcoins, this is definitely democratizing the finances at the end, so they're not held by the government, and it's definitely a good thing, and we're seeing this always as a success, and there's no stopping to that part. So I do agree with you.
I'm glad you do, because 98% people have all kinds of questions. At the end of it, they don't know anything about it. I'm like, you can choose not to act on it. It doesn't mean that the train is going to stop. Nothing stops the train.
Agree. Thank you, and
Thank you.
hopefully we'll see you again.
Absolutely. Thank you.